Time for the latest earnings outlook now with Research Director Shiraz Mian. Well, the Q1 season's about 85% over now. Moderately positive, I guess, is the grade you could put on it. When the dust settles, what do you expect to see growth and margin-wise?
My grade is a little bit better than yours, Terry.
Really?
Yes, it is. Yeah. I think just stepping back from looking at the quarter in isolation, I think the best way to assign a grade to any earnings season is relative to two metrics. Number one, relative to preseason expectations, and number two, where we are in the longer earnings cycle. So when you look at the Q1 earnings releases up till now, which is essentially, you mentioned 85%, so that's pretty much all of it.
Yeah.
Both those metrics relative to that, the performance has been very good. So at the start of the earnings season, I was here telling viewers that the expectation was for earnings to be down about 2%,
Right.
from the first quarter of 2011. Now, with 85% of the results in, the growth is tracking 7.5%. Almost 2/3 of the companies are coming out with positive surprises, almost 4% median surprise. This is better performance than what we saw, not only relative to preseason expectations, but also what we saw from the same companies in the fourth quarter of 2011 and the third quarter of 2011. Now, so expectations were low and the companies are beating it better than expected. But keep in mind that we started this earnings cycle back in the middle of 2009. This is like the 11th or so quarter. And we had about 8 quarters of double-digit growth rates through the third quarter of last year. So when you look at the longer sweep of where we are in the earnings cycle, 7.5% growth, about 6% top-line growth, that's very good performance.
Okay, so you'd put a grade of very good on it?
Solid, good. Maybe very good too, yeah.
All right, let's look forward then. Employment levels are really bad. Is that going to have any impact on earnings for the rest of this year?
The answer is it depends. Depends in the sense that depends on which industry sector you're looking at. So if you're looking at corporate earnings in the aggregate for the entire S&P 500, for example, it will not. It may, in fact, have a moderately positive impact, and let me explain why. Among the operating line items in the context of an income statement for a regular corporate entity, payroll expense is the largest expense item.
Okay.
So one of the reasons why earnings have been so strong is that in addition to the top line, managements have been able to squeeze out more from existing employees, so that if they can squeeze out even more from them, that drops down to the bottom line.
Yeah, they've been cutting to the bone in a lot of these companies. That's been a big help as far as earnings are concerned.
That's right.
However, that game may be coming to an end.
That's true. It is coming to an end, and that's why you're seeing more hiring in the economy now. The pace of hiring has been kind of tepid in the last 2 months, but it's still positive. 100,000 plus jobs a month may not be as impressive relative to what we saw in December through February, but relative to what we saw in 2011, 2010, those are pretty good numbers.
So going forward here, as we get into the second quarter picture, are beats going to become more difficult to come by?
That was the expectation to begin with for Q1 as well, and I think that's a fair assumption. We are way too long in the earnings cycle now. Mid to low mid single-digit earnings growth should be the norm. The extent of beats should be south of 60%. Median surprises should be lower than 3%. It's been an amazing thing to watch how good managements have been in anchoring expectations on the street. I haven't really seen a lot of movement, either positive or negative, for the second quarter as well as for the full year. Expectations are fairly stable. That said, Q1 was supposed to be the low point on the earnings growth front for 2012. The Q2, Q3, and the full year, the earnings growth was expected to pick up even from the beginning. So Q2 should be better, the full year should be better, and given what we saw in Q1, I think the earnings outlook is not that bad.
Okay, and we're going to keep looking for changes in your earnings trends picture on our homepage, Zacks.com, because there Shiraz puts up a weekly assessment of the macro earnings trends and takes a look at all of the different components in those trends. And there's where you can get his latest thinking on the overall earnings trends picture. With Shiraz Mian, I'm Terry Ruffalo.